Thank you everyone for coming. I'll go through this as quick as possible. A little bit of a mix-up on the timing this morning. Obviously our initial cautionary statement to begin with. Our company's a little bit different in that first of all, we're established supplier of diamonds to the world market. We've been supplying diamonds for probably around 12 or 13 years now in South Africa. We have a strong management team with extensive experience. We do have a strategic alliance with Tiffany & Company. It's not an off-take agreement, it is an alliance. They're about a 6% equity owner in the company. The project that we're currently developing is directly related to the flagship Venetia project, which is De Beers is going underground at. When we say we're co-located, our plant and infrastructure and everything is about 1,000 meters from the actual pipe of Venetia. And we have about just under 6,000 hectares directly below where the displacement of the top of Venetia was sheared off and eroded. We are near-term production. We're looking to try and move this into production in the next quarter or two. We do have cash flow already, and we expect to move, once we move into production, to get into an earnings potential situation. The current diamond industry, I think probably everyone understands pretty good that the existing mines are definitely nearing the end of their life. The current reserves that we would see before we start seeing shortages, and real shortages, would be about 18 years. If you take up what's left, we know the mines that are out there very, very well. Certainly the demand for high quality natural diamonds we expect to remain very strong. There'll certainly be synthetics come into play, but they'll market a little differently. And the diamond demand for large stones, especially in the 2 to 5 carat zone, is definitely growing. Luxury retailers, as we see it, our alliance with Tiffany's, we know that ultimately people are looking for sources of high quality diamonds. At Venetia, we're looking at about 60-65% gem or near gem quality, so we fit right into that category. And on a go-forward basis, we certainly expect that in the last couple of years, while we've seen some weakening in prices, certainly the trend at this point seems to be that we'll see stabilization in prices and perhaps even a little bit of increase in the years going forward. We sort of see as well that we could see some variety or variation in that increase as we look at better quality stones where gem we think has the potential to go up a little stronger than, say, industrial, but we'll see how that plays out. Our strategy is we focus on near-term production from known sources rather than exploration. It's a very, very difficult game, exploration. We look to try and secure gem quality diamonds from known sources. We focus on projects with high percentage of gem diamonds given our relationship with Tiffany's, low capex, strong economics, and also we look for growth potential to keep this thing going for years to come. We simply do have the same as everyone else. We employ the latest modular technologies to lower operating costs and improve operational efficiencies, and we certainly leverage those key relationships with Tiffany's to secure funding and minimize dilution and maximize shareholder value. The project we have, as I've said, is directly adjacent, and it's related to the De Beers Venetia mine. The deposits we mine out are the results of the shift in erosion from Venetia pipes. A lot of people mistake our deal for an alluvial. It's actually an alluvial, where we've had a displacement of the top of the pipe off of Venetia. We do surface mining, so it's very low cost. There's no underground, no blasting, and the deposits are diamond bearing, typically right from surface down to bedrock, which never goes more than 15 meters in depth. We do have a 30-year mining right in place, water use license as well, and we've done extensive development on the infrastructure in that's now complete. We'll be putting in a paste thickening to deal with some water issues that we experienced at the end of the year. Once that's done, we expect it to be about 90 to 120 days. We'll start to ramp up, and then the idea is to declare commercial production at that time. In a very small area, our 43101, we have a 1.4 million carat indicated deposit right in the immediate area of K1, what we call it. It's over about 110 hectares. As I noted, we have about 5,800 hectares in total. Here you can see the Venetia mine as we see it in the bottom of the picture there. The line that goes around that is the internal fence. The external fence is about 11 kilometers away. And the two areas of Cronin and Dora are what we've secured. Certainly Venetia is a pretty significant mine, as we all know. It's currently going underground at a cost of about $2.1 billion. Obviously at their peak production they were doing about 750,000 carats a year out of the open pit, or about 9 million carats a year. And we also know obviously that we're dealing with a very high percentage of gem and near gem quality. The largest to date they've recovered is around a 315 carat stone. We have a large stone cycle built into our mine or into our operations. And we're targeting, and we expect we have the potential to see stones up to maybe as much as 400 carats. But without question, this is one of the most prolific sources. Now, by De Beers calculation, their thoughts are that if we look at this slide, this is the current surface level now. Their estimate is as much as 1,000 vertical meters of the pipe was sheared and eroded off over the last millions of years. Knowing the grade of Venetia and knowing the amount of tonnage we're talking about a displacement of somewhere in the neighborhood of 50 million carats. Now, we're not expecting to find 50 million carats, but certainly our target, we expect that we have the potential to see 3 to 5 million, at least in the short term, and again, very good quality diamonds. Now, we know from the work that was done by De Beers that the deposit was, or the displacement took place in this area off to here. The ancient paleo channels are here. This is where the low-lying areas are, and the red represents simply rainwash that goes over it. We permitted this 600 plus hectares with a mining right. We've applied for the additional mining rights for this area as well. So what we'll do is we'll put this area into production initially, and then we'll continue to bulk sample and expand it out to these areas. So really what we end up with is a near-term production scenario with cash flow, and then we have a tremendous amount of upside that we can work with as well. Now, when we blow up this area here, we completed the drilling. We just did RC drilling of about 600 holes just to define the bedrock contours, as this material just simply tends to lie in the low-lying areas. This is where our plant exists. This is the inside security fence around the pipe. The deposit came in this way, went out here, and then out this way. Now, De Beers had done bulk samples in these areas. This is where we've got the 1.4 million carats initially, and we'll start. As soon as we have this area up and running, probably mid-year, we'll then go and we'll bulk sample. We know the tonnage over here. We just haven't bulk sampled it to attribute grade. So again, near-term production scenario with growth. The infrastructure we have, as I've said before, we really exist with Venetia. We drilled just under 600 holes when we started. We built about 50 kilometers of roads, bridges, everything to service the site, all the security fencing, gates, extensive water dams. We have 7 boreholes. All the water infrastructure is independent of Venetia. About 20 kilometers of underground pipeline to service the mine. This is the entrance to Venetia. Simply there, you go straight through to go to Venetia. You turn left here and go into our actual site, follow it around to the back. About a 10-kilometer main power line we put in with Escom to service it, backup generators, solar power. We have worker housing for about 100 people, full complement of heavy equipment. Our plant, we have a 500-ton-an-hour dry screening plant where we remove fines, and then we have about 150-ton-an-hour DMS that we use to recover the actual diamonds. The dry screening plant is now largely complete. It was an extensive development over a period of several years. A lot of sand in this, a lot of fine material. We dry screen without the use of water down to 1 millimeter using polyurethane panels and that. So we essentially pre-concentrate. It successfully takes out probably around 60% of the material that does have some diamonds, but it's not of a considerable value. And it provides obviously significant operating costs as we're really pre-concentrating without the use of water. The main treatment plant is modular design, simple technology, DMS, extensive computerization, monitoring. It is deposit specific, about 150 ton an hour. It processes the screen material from the dry screening plant. And we've set it from 1 millimeter on the low end to up as high as 45 millimeter in the large stone cycle to try and catch some of those bigger stones. The final recovery, we use flow sort X-ray technology. We have about a 4-story facility there that has flow sorts throughout, automated hands-off system, computerized monitoring, and obviously high security. So our current focus right now, finalize the paste thickener, and that will be the focus for the next 90 to 120 days. Once that's complete, we'll see an increase in the volume from what we're doing even now. Obviously, our revenues will go up. Then we'll see the potential for significant revenue from large diamonds. We have recovered the 91.7 carat that you see on the bottom here in testing. About 110,000 carats have been recovered in the development of the plant. Average dollar per carat about $178 US. We'll start additional sampling in the other areas. But the key value proposition for us is obviously this. It's a proven team, significant experience supplying diamonds to the world market. Clearly a good person to be aligned with Tiffany's. a quality project. It doesn't really seem to us to get much better than being co-located with Venetia. The infrastructure is complete. Obviously, we're at a key inflection point where we're just about ready to go. Low operating costs and obviously a late-stage opportunity. I'll be in the booth. You can ask any questions you want there. So thank you very much for your time. Have a nice day.